Presentation focusing on unlocking the potential of alternative investment strategies in West Africa's real estate sector to accelerate growth. This is going to be presented by Linda Unogboki, sorry if I got that right, Head Consensus Real Estate Global WG. I believe she's joining us from the UK. Hi, Linda.
Hi, it's great to see you, Kafe. How are you doing?
Yeah, very good. We can hear you loud and clear. So nice. I'll hand over to you if you can start sharing your screen. Okay. And if there are any issues, we can assist from there.
All right, great. So first of all, I think it's not gonna. Okay, 1 second. I think I should be good. Great. So yes, hi everyone. It's great to be here and to do this presentation. I've gone into full screen mode. Is it working?
It's not full screen. It's not full screen yet. Yeah. Okay. There we go. Perfect.
All right, fantastic. So yes, so I'm excited to be talking about unlocking the potential of alternative investment strategies in West Africa's real estate sector, and the goal really is to give a presentation that kind of like says what this title, what it says on the title, a bit of the content while be covering an agenda, whatever we want to call it for this presentation. I'll give a brief background to myself. So even though I'm based in the UK, I'm from Nigeria. I've been in the UK for about 17 years. My background is in innovation technology, but really I cut my teeth in the real estate sector back in Nigeria, through family investments in the sector, which obviously still continues till now. So I'm really familiar with the real estate investment market in Nigeria. And currently what I'm doing, I've been over the past 3+ years, really focusing on the on the bridge between prop tech and real prop tech and and financial services to see how things like alternative investment strategies can really help to unlock a potential for us, especially in the Sub-Saharan African market. And in West Africa, we look focus on Ghana and Nigeria in particular. So this is really the context for this presentation. How can we use technology? In particular, I'm going to be talking about blockchain technology because I think there's a lot of benefits it brings to the sector to release transparency and trust and to really help the collaboration of the ecosystem. So over the past few, over the last few days or past few sessions, we've seen a lot of conversation around collaboration collaboration across the ecosystem. We've seen a lot of talk around operational efficiencies. And I think the last session, which, the team handled really brilliantly, is a really good segue. That was talking about crowdfunding and the need for us to make that much more dynamic in our West African markets. Is a really good segue to what I'm talking about right now. So I'll start from a very high level macroeconomic perspective, a few figures, why this is important for us. So this is covering Sub-Saharan Africa, again, 3%, 3.7% expected growth in GDP. A few things I think are really worth looking at here is the total percent of land which is registered, 10%. That is like in the entire Sub-Saharan African region. That is not a lot, right? And of course, when you look at the mortgage rates here, you have only 5% of mortgages. This was in 2015, but I doubt that 5 years later, there has been significant improvement, if any. So I know there's been a lot of work happening over the past few years with a lot of countries. Ghana in particular has been looking to really elevate the real estate housing market. When you look at the dynamics for West Africa, then you see that even in West Africa, we have a much more, how do I say this? We have a much more serious problem around land titling and having formal land titles. And as we know, without having a system in place that really helps us to guarantee land and ownership of land, then the rest of the value chain kind of like is affected, right? And so what's been happening is Tanzania, in the previous slide, you see that Tanzania recently has actually completed a survey of all its communal lands and has registered formally 60% of those. Ghana is following suit, and the government in Ghana is helping to support this as well. Ghana is really a very particular case because you have lots of customary lands, and what you have is at least 70% of the cases in the local courts in Ghana are related to land titles. So there's a lot of like local customary customs that go to the allocation of land titling, but the government is trying to really help to follow Tanzania's example. And in terms of Nigeria, what's happening is that you see, so the UN Habitat, as an example, has stepped in to offer an incentive to the governors to say for all the lands they're able to, all the titles they're able to register. So 50% of the lands, as an example, within their states, they get an incentive of like $2 million. This is what's happening. But I think the main thing here to look at is the deficit. So between Ghana and Nigeria, you have a 20 million. You have a deficit of 20 million homes, right? And even though Nigeria is building at a rate of 100,000 plus houses every year, this is just a significant amount of deficit. So what we're saying is really you have to solve the housing crisis. And to do this, you're basically going to be unleashing a lot of economic growth across the region. So what exactly is the problem? What are we trying to solve for? The main problem we see is the broken value chain across, a very, very highly fragmented value chain. So you have urban planning and land ownership, like I said, all the issues you have around that and how it's managed in one section. You have property finance and investment in another section. Access to finance for, development finance, as an example, is really, really cumbersome. A lot of us have talked about this over the past few sessions. The construction and development is a very expensive process, especially because a lot of imports, a lot of well-built homes, so to speak, rely on foreign imports. And if that's not the case, then you have a lot of like small-scale contractors building homes, which is a great thing. It's helping the local economy. That's not a bad thing. But I think this fragmentation is really not helping. Is really not helping the entire real estate sector. I think this is important because and then finally, of course, when you have the end point is when you have all these issues around the value chain from the top, it kind of like filters down to the homeowners, right? So everything around home ownership, it becomes much more expensive to own a home, and market participation becomes it becomes more of a struggle. So you have underdeveloped ecosystems. And so what's happening is the reason why I'm sharing this slide is because, in particular, when you talk about blockchain technology is really, the real goal for blockchain is really to help to bring ecosystems together. Now, for those of you who may not know what blockchain is, very simply, it's a distributed ledger that helps you to bring various participants together to share information, to have transparency around data records, and to be able to efficiently carry out processes. That's like the simplest way of explaining blockchain. But some of the main benefits of the technology is the fact that it's tamper-proof. So again, it helps to prevent against fraud. And it's also, like I said, transparency, because everyone has access to more or less real-time form of data. So when you look at those 4 areas that I highlighted in this previous slide, right, you see them reflected here. And you can see that by using blockchain as an example, as an infrastructure to really support the ecosystem in the real estate sector. When you go to the land titles, it solves the problem about transparency and registration of titles and making that digitized, digitizing that process in such a way that it now helps to benefit the construction industry. And so you have clear records of who owns what, who owns what titles. Even in the construction industry, you're able to track and trace development and how your supplies of your products are coming onto the site. And in terms of like project financing and investments, it really helps to democratize access to investments. Yeah, there's something around tokenization, which I'm going to explain in a bit. But I think also the team previously has spoken a lot about crowdfunding. And this is something we really need to look into in the West African region in particular, if we want to make this sector a success. In various parts like the UK, as an example, crowdfunding platforms for real estate have been thriving in the last few years and are doing really well. And so there's absolutely no reason why we shouldn't be kind of like, following or, using similar examples to improve the real estate sector. And then finally, around home ownership and market participation, it helped to improve market participation within the sector. And this is how you begin to open up the economy. So there are two main solutions, right? From a prop tech perspective, there are two main solutions that we need to solve for in particular to really bring benefit to the West Africa real estate investment landscape, in my opinion. And the first is what we talked about, the titles. We really need to be able to solve for secure, immutable digital registries. This will help to guarantee not just titles, but of course, we know that once you have confidence in titles, then it gives you confidence as well in the investments that you're making into your assets, because you have a guarantee of who owns what, right? And is backed by law. And also it helps to provide additional information around data. So you can almost see the land titling as the initial block that you're laying in the foundation, where you can also begin to add much more information about the asset, the property, as it grows over time. Just as you have it as an example in the UK with the Her Majesty's Land Registry. First of all, you have land titles, but you also have additional information about the property being added onto this. So you're actually building the profile of an individual asset, of an individual property. And that kind of data is really, really valuable for the sector moving forward. And then the second part we really need to solve for is fractional ownership. Because let's face it, in places like Ghana, as an example, the home ownership rates are really low because homes are really expensive in the capital. So when you talk about Accra as an example, homes are priced in dollars. Very few people can afford to earn this. So you need to find alternative ways of really solving for investments into the sector through fractional ownership or fractional investments into these schemes. So one of the major issues we have in general, right, in West Africa, Ghana and Nigeria, is mortgage interest rates. It's a big problem. When you look at Ghana, you see that their rate terms are around 20 to 30%, I think it sits in between 25%. So looking at this place highlighted in bold here, it sits around 25% when people are borrowing from banks in Ghanaian cedis. And then you see that, as an example, a particular mortgage lender has 50% market share. And when you compare these rates of 25% to what they actually provide to the market, that's actually very accurate. And then if people are lending in dollars, then that goes lower to between 12 to 13%. But still a high amount of interest, especially when you compare it to, again, places like the US, the UK, different parts of the world, where mortgage rates is between 3 to 5%, on average, or sometimes even a bit lower. So Nigeria's profile is quite similar. Again, this chart is a recent chart that has been sourced from the Nigerian Mortgage Refinance Company. And mortgage rates from regular banks are between 20 to 25%. If you're borrowing from the National Housing Fund, that goes down to between 6 to 9%. But how many people, how many consumers, how many developers can all borrow from the National Housing Fund? And the National Housing Fund, I suspect, has a limit to how much you can also invest into the sector. So the goal here really is to ultimately reduce the cost of borrowing, to make it easier for the developer to be able to borrow at a much affordable rate. One way of doing this is access to, as we know, access to sovereign funds. So again, having the IMFs or IFCs or World Bank providing discounted rates to help develop the real estate sector at typically around 3%, and then that can be passed on to the rest of the industry, right? I think the key thing here is the enforcement, because what you have, as an example, the government might give the banks those same loans at 6%, and then the banks can charge their interest at whatever percent that becomes, that they wish to, and then it inflates the price. But what you have in places like Europe, so you have like the ECB as an example, when it's trying to help to shore up the economy. would give a certain loan at a certain rate and ensure that the banks do not exceed a certain percentage of interest when they're loaning to the end consumers. So that kind of level of enforcement really has to carry through for our mortgage industry to improve across West Africa. And then similarly, the second option is to increase equity investment in the sector. So how do you do equity investment? Well, again, going back to the crowdfunding models and fractional ownership models, which previous speakers spoke about last time, but looking at this from the perspective of having a blockchain-enabled platform. So this is a scenario that has been modeled based on some real statistics from using the Ghanaian market. Typical equities between, on the left-hand side, what you see here is typical equity deposited is between 20%, and then the debt you have from the mortgage is about 80%, right? But even though you have the debt from the mortgage at 80%, and again, this is in USD at 10% annual interest rate, what you still have is that you're significantly paying a bit more. You're paying at least $430 a month compared to if you were using fractional ownership models, so alternative investment models like crowdfunding as an example, where people help to shore up your equity to 70%. And so that significantly helps to reduce the amount of repayment that goes back into the mortgages. And so by really rebalancing your portfolio, everybody more or less becomes a winner. You have more investors in the real estate sector, so 70% of equity from having these crowdfunding models or fractional ownership models, and then you're really reducing the amount of outpay back from the residents. This is quite important because what happens is that you're not just helping. So again, this is exactly quite similar information that has been modeled across. But what you see here is that you're not just helping to reduce the monthly repayments, but you're also helping to reduce the level of entry, the entry level of participants into this marketplace. So instead of an annual income of about, I don't know, let's use the first scenario of $8,000, the second scenario of $8,300+ a year, which is quite high. And on the next chart, I'll show you the demographics in terms of affordability in the Ghanaian market. You've now taken that to about $3,000, which is at least, more than about 60%. You have significantly reduced the affordability levels. And so this is how fractional ownership really helps to drive affordability. You need to increase market participation. Let's face it, for our real estate sector to be successful across the region, we need to have wider market participation, full stop. From people across various demographics of earning and earning power, to also inviting people, whether it's the diaspora, to inviting the international communities to invest in our markets. And this is one way we can help to do that. We need to think about clever ways of using technology to drive transparency through the system, to help people to invest smartly, and to make sure that the returns on their investments are easy and traceable as well. All of these are benefits that you can use through blockchain technology. Again, a few modelings to show you that this is not a hoax. This is using real data that is available from Mekasa, which is a Ghanaian website that lists the listing site. Mortgage repayments reduced from $1,000 to $401. Similar, and again, using similar different profiles. Okay, using different profiles of properties, you see exactly the same thing happening on this blue spot over here. So how does this help? Well, essentially what we're saying is that we're just helping individuals and families to climb up the economic ladder. You need fractional ownership models to help people to become better participants in the real estate sector. We need to include, I remember, I think it was Daniel who mentioned about SUSU schemes and other types of cooperative schemes. People who are not able to own a share of, who are not even able to enter into the property market, at least can begin to own a share of equity in an SPV that has been created to own this asset, or at least in some form of asset, or they begin to have a participation in this real estate market. And finally, you begin to reduce the lending rates as well, so that people are able to afford homes and you're able to upskill and move into better homes. So I want to talk about tokenization of real estate assets, because when you talk about blockchain, you're really, or when you're talking about crowdfunding of fractional ownership from the blockchain perspective, you're talking about tokenizing real estate assets. I'll go into a very high level, but 101 to explain what this means. So essentially, what is a token? A token represents the ownership of an asset, the ownership of something, right? In the when you talk about blockchain use case, it always starts with a token. And you talk about fungible tokens means that they are all the same type of thing. So a currency, as an example, is a fungible token. Naira is fungible. You can always replace it. But when you talk about non-fungible tokens, then you're talking about unique types of assets. So real estate, as an example, is a fungible token. When you're talking about tokenizing the asset now, tokenizing a financial asset, what you're saying is that you're basically merging the token with a workflow, a set of rules or mechanisms which have been programmed into that token to make sure it acts in a certain behavior, it acts in a certain way, it obeys those rules, and it always kind of like conforms to those rules. In blockchain terms, we talk about smart contracts. It's literally like some legal agreements that have been programmed to make sure that your asset always behaves as per the terms of those legal agreements or those legal terms. And this is important to in the real estate world and in the world of real assets, because even when you're managing, think about it from a financial perspective, right? When you're managing real assets, it's an inefficient process. So let's talk about private market issuance of real estate as an example. It's very paper intensive, cumbersome registry maintenance. There's limited liquidity in the market. The same way if you're talking about issuing bonds for real estate, is complex. You have to talk about monitoring the risk and collateral. How do you combine all that together? And there are just multiple processes. Again, we've talked about there's multiple processes in this as part of that step that makes the whole, that creates silos. Again, if you're talking about, okay, fine, we want to create like syndicated financing packages for the real estate sector. As an example, recently with all the recent lockdowns, hospitality sector was in trouble, right? So in places like in the US, in the UK, financing companies like GLLs and the rest of them were coming together to finance the sector, to create syndicated loan packages. But again, there are multiple parties in this process that are trying to finance the sector. Lots of manual reconciliation of data, highly fragmented, high level of fragmentation. So what we're saying is that you can use blockchain to literally begin to digitize these processes, create rules, legal agreements that you program into these assets that you have digitized, basically your real estate, so that they begin to comply and they begin to obey those rules. The results will become faster settlement times. Compliance is built in, so automated compliances. You break down the data silos, and more importantly, you solve the problem of double spending. And so what you have now that is happening is you have a blockchain-based digital assets platforms. Different companies have different names for them. In Consensus, where I work, the company's our platform is called the Codify Digital Assets Platform. Well, literally using this blockchain-based platform, you can now take your real estate, create a digital twin of your real estate on this platform, create tokens, which are literally digital shares of your asset on the platform, issue this out to the public or to accredited investors. And once you've done that, you now be able to attract capital into your investments, and you're able to manage the entire process of the investments. So the cap table management, the investor registry, all of this you're able to manage on a single platform in such a way that it becomes much, much efficient, transparent for you and transparent for the investor as well, to the point of even secondary trading, where you're able to connect either to a digital exchange out there, or you're able to create like OTCs. So, you're able to create like OTCs, which are like bulletin boards, as an example, where people are able to swap their assets between each other. And you're able to do all of this through a single platform. The fact that, again, that it's blockchain-based helps to provide transparency and consolidate the interactions across all these various participants who are part of this process. So why is this? I'm not sure how I'm doing with time, Kafe. Can I just ask?
You have about, let's say, 2 to 5 minutes left. So I think we need to
fantastic. Thank you. All right, cool. So just in terms of applying this to real world use cases, right? Daniel mentioned, so Daniel from CESO, I mentioned the process of how crowdfunding, as an example, happens right now in I think also in West Africa. He was trying to see how it happens now in Nigeria or in Ghana, to say that, you don't have to wait for regulation. So as an example, what's happening is you create an SPV and people are able to invest into the, so the owner of the property is able to buy, it creates an SPV and transfers the title to that SPV, and investors are able to invest in the SPV. This is how asset financing works right now. Ideally on blockchain, so in places like, in some places of the world, ideally blockchain should be eliminating this whole process of creating the SPV. But the truth is that we have limitations. Like in the UK, for example, there are limitations around the ownership of title. So you cannot have more than 4 people owning the title, which means that if you wanted to eliminate the SPV process, you cannot have more than 4 accredited investors on the platform, which doesn't work, right? It kind of like doesn't really solve for the problem, which is to access much more investors. So because of regulation, you still have to follow this traditional structure. However, what's happening now is, again, like I said, the blockchain just makes the whole issuance and management of the SPV process so much easier to investors, end to end. But something that is also happening, that has just recently started happening, is the world of decentralized finance has started having a look into this whole, this is becoming interesting. So the concept of decentralized finance is that there's a lending pool, people who typically hold like cryptocurrencies or other forms of such currencies, stable coins, as we like to call them, as an example, invest into this lending pool, and investors are able to, or borrowers are able to access this lending pool for various projects. With the recent lockdown over the last few months, a significant amount of money has gone into the world of decentralized finance. At the last count, maybe last month or a few months ago, it was $15 billion that is basically locked here in this lending pool, right? About $15 billion. And people are looking for a way to invest in real world assets. So what you're seeing now is the emerging, or the emergence and the merging of the world of decentralized finance with asset-based lending. And now, as an investor, you're able to invest, as an example, into an SPV that Kafe, has created to buy property in Lagos or in Accra, in Abuja, wherever it is. But you're able to use that piece of property, so that asset, that's whatever shares you have created, you're able to actually have that as your collateral, and also use that to borrow against some additional collateral, to borrow a loan, as an example. So there's an exchange that's happening within this world of cryptocurrency and digitized assets that I think is becoming really fascinating. Over the next few years, without any doubt, is going to open up even more. You're having a lot of things happening in the future of finance around, central bank digital currencies, as an example. Ghana is looking at it, Nigeria is looking at it, and we're looking at it from the perspective of using blockchain technology. And so that's why blockchain in particular is really, really helpful to be used as a core level infrastructure to build these platforms on, because when you're building on blockchain as the infrastructure level, then you're opening yourself up in the future for further access to various types of business models, as an example. The last slide I'm going to show you before I go to the key takeaways might be a bit controversial, but, but this is really what the future might look like. So imagine all of this, right? Ultimately, think about it. If you're an asset owner, really what you want to be doing is you just want to be issuing assets to investors, right? You want a continuous cycle of investment flowing into your portfolio, especially if you have an asset or portfolio, or portfolio of assets as an example. So really, this is what the future might look like in 3 to 4 years' time. Who knows, right? It could be sooner. But it's the idea that you can literally, I talked about smart contracts previously, where you're basically programming the functionality and the behavior of your assets that you have tokenized so that they comply always to a certain kind of behavior. And this is it, right? It's the idea that you can literally, as an asset owner, sell your assets into a smart contract, into an SPV smart contract against this lending pool, and continue to get loans or collateral or debt financing for financing your asset. This is what the future can look like. I said it could be a bit controversial because obviously it takes a lot of people in the middle, but you know, who knows, in 4 or 5 years, people are already working on this, people are already looking at doing this, this may be realized. So I guess the key takeaway is really, I'd like to just highlight is the market opportunity. You know, the government support is needed on the national level for sure, for our West African real estate markets to thrive. Better policies, SEC, I heard about the 100 million crowdfunding, you know, as an example. Such things, such red tape, such policies will not help to activate the startup landscape in particular. So we need to think about better policies. CBN, the banking sector, needs to think about how to really help with the mortgage rates as an example. Access to international capital markets is really important for us to get softer lending rates that can be transferred on, not just to the developers, but also to the end consumers eventually. And then we really need to think about blockchain technology, using blockchain to leapfrog the sector. This happened in the mobile world. I come from the mobile world as an example. I saw how in a matter of years, mobile technology like literally took off and everything else was wiped out. Digital exchanges, landlines, everything, you know, in Nigeria in particular, and the rest of Africa as well. So it's something that cannot be taken for granted. Innovation is happening fast. And as a sector, as West Africa, we need to be part of this. And again, I talked about this, the future of finance, decentralized finance, central bank digital currencies. These are happening now. We need to prepare our assets in such a way that we are no longer old school. The real estate sector is so old school sometimes, even abroad, right? But we need to no longer be old school. We need to be digital first, digital focused, and prepare our assets in such a way that we can interact with the future of finance, the tools and systems that are coming up. And finally, using blockchain to break down silos, bringing better collaboration and bringing greater transparency about data, because the data would always help to market valuations of assets, as an example, portfolio analysis. The better data we have, the better our real estate sector can thrive within the region. So it's been a pleasure to give this presentation, albeit quickly, but it's been great. Excited to be in touch with the team, and thank you. Thanks for the opportunity. Thanks, Kofi.